Friday, August 25th, market commentary, market analysis. Stan Ehrlich. We have a little bit of a bounce after yesterday's very significant bearish engulfing in almost every index that I have looked at. And that bearish engulfing, since it was so prolific, I am marking it with a few little red dots. It's not a real ER sell signal like we did get on top of the market on July 27th, which started this whole thing. So this bearish engulfing is not quite overbought. As a result, we don't have a red bar. So is it going to work? There is the common retracement of around 50% that happens often within a short number of days after bearish or bullish engulfings. And that's almost exactly what the market did this morning. Came up to almost exactly the middle of yesterday's range and then dropped back down and actually made new lows. But at the moment, and I'll get to why this is so important. At the moment, we have a pretty good rally going. This is the 1 minute chart. Opened a little bit higher, slipped, but made a high for the day so far, the high of the day, 141.21, I think. Then went down and made new lows. And that is new lows for a significant new low. Now we've come back to about 1.5 points higher on the day, sinking slightly. And the DIA is very, very similar, but there's another important feature to the DIA. And the QQQs are barely unchanged, higher just by a few ticks. So they're the weakest of the group at the moment. Now, why is yesterday so damn important? It seems to be the last shoulder high of a head and shoulder top formation. The first shoulder high was June 15th. Popped up, came down for approximately a week or so, made a low. Now, at the time, of course, you have no idea that that's going to be a shoulder. And has a little bump here, a secondary shoulder, if you will, or an inside shoulder, I've come to call it. And then it rallies to the top, and we end up in a resistance area in overbought conditions and with some divergences, plus a bearish ER sell signal so far on the high damn day. ER3 popped up, lost a little money first day or two, but never got stopped out, and on the way down profitable by the time August 2nd rolled around again. Our signal's July 27th, the top. We came down significantly, and guess what? Got oversold again, and it was in the ballpark price level of where the other low was. So now you got a possible shoulder and a possible head, and you're looking for a bounce, and this is what I was saying on August 18th. So we had a bounce. Here's another feature about head and shoulder patterns. Not always, but usually the first shoulder is a number, whatever that number may be. It could be large, small, days or amount of time before the top. Now that amount, you could cast forward in time and come up with a date and or time of day for that matter, when you would expect the potential of another shoulder, like over here. And doggone it, yesterday, although it wasn't on time, it was either, depending upon how you measure the pattern, a couple of days late, no big deal, or maybe about a week early. I'm going for about a week early. Now, the reason I say that, and I'm going to add some space here so we can see what I'm talking about, and this is important. I know this is a Friday, you guys on the weekend. So here we go. This little blue line right there is from the shoulder high to the same 1 day early of the top of the formation. So 1 day after that, I start the same copy length blue line, and it ends up landing me on September 5th. Hey, why not have yesterday be the inside shoulder, which, you know, it could be, and for approximately a week and a few days, we're bobbling around above the neckline. You don't want to cross that neckline yet, or it's going to be a breakout. Pattern's finished. Down we go big time. Actually, a 50% correction of the whole damn bull market, this forecasts, if it works. So back to the timing aspect. If we're going to see another high on September 5th, we have to stay approximately at the highs of yesterday. It could be a little bit higher. That's not going to matter too much. Maybe 47, even 48, as long as it doesn't get too much higher. And I'm well aware there's a gap to close up here. I don't think that's going to happen. I think this head and shoulders not going to end up with that gap closure. One of those rare ones. It's going to be going down in history as a breakaway gap, I think. I just want to see lower lows and drop a lot more before I claim that's a breakaway. But so far, it sure as hell looks like it. Now, that implies we're going to get, excuse me, stuck between above the neckline, which is almost flat, around 433.5, and for the high end, approximately 45, 6, 7, 8 on the upside for a week. If that doesn't happen and we just plain start to break down, which is quite possible, we're going to see today's lows broken. It could be today. By the way, it's 9:58 California time. You can see that, I believe, on the bottom corner of my window. So, screen. If more weakness sets in, I think it would be easy for it to make new lows, and you'll be breaking into new sell stops again, plus the fact that it would be very close to the neckline, and it just might break out. Now, what happens if we get that bearish breakout? And that's exactly what I expect, either very soon or maybe about a week and a half from now. But the situation is, it's supposed to produce a minimum downside. It does produce a minimum downside expectation of about 406. Hey, guess what? A few points lower, a couple points lower, we have a 50% correction, a Fibonacci percent correction of the whole bull market from our buy signal at the bottom on October 13th to the high of our sell signal in resistance, etc., a few weeks ago. So we just took the whole leg of this bull market out, actually, if you look at just those two signals. Now, bear markets fall faster than bull markets go up. This is not a bear market, but it's the biggest correction, if I'm right, that we're going to be seeing during this bull market. And I think it's a great buying opportunity if we can justify it. When it gets down to 407.5-ish, let's call it anything below 410, I'd be extremely looking for buy signals. So, and that may take, guess what, a month or two. And that leads us right into October. Now, last year, the October lows were a 10 out of a 10. No. Last year, that was an 11 out of 10. It was an unbelievable, fantastic head of a head and shoulder bottom formation with a bullish engulfing and oversold. Everything lined up, including the seasonality of October lows. Now, again, this year, look at what we got. We got a pattern that looks bearish. It's starting to work its way lower. We need to see a new low close below that neckline, and soon, within a couple of weeks or less, and certainly no significant amount of strength, or it's just going to start to break down right away. Now, that's the story. If we do get too strong and too fast, or it takes too long, so that's up too much or sideways for too long a period, that is going to begin to ruin this head and shoulder top. So we know what to look for when it goes bad, and it can, and we know what to look for if it's going to be good. And that could be at any time, breaking down below that neckline. It doesn't have to have a double shoulder on the right, but they are not terribly rare, but they're kind of rare. Double shoulder head, double shoulder tops, not that common, but this could set up to be exactly that kind of thing. But we could go south right away. Stay tuned. Very big stuff developing here. The DIA has already broken what I consider to be the only plausible neckline, and I don't like the way this pattern looks at all. You've got the double shoulder on the left, and you've got a reasonably modest upward slanting neckline, but there's no shoulder on the right. Yesterday's bearish engulfing, yes, it was, and it's bearish, did break a line you drew across the lows, but really, that's a shoulder? I don't think so. It should have been a little higher. It should have been a few days in the making, something a little bit more chunky. Not that one little day spike, but it's a body part. It's there. It's just looking really weird. You got the top of the market rolled over, two bearish engulfings in a resistance area. Come on. And we've made new lows today. Again, we're testing now and breaking a little bit below an old head and shoulder bottom neckline. It's a really unusual one because back in December 19th-ish, you had a bottom. Then you had the lower low early in the year in March, the middle of March. Now, at about the same price levels, you had another low on May 25th. That is approximately the same amount of time backward to the head as the head is backward to the first shoulder. Plus the fact the neckline is slightly downward slanted, which is extremely common. So a little bit of support. These are counteracting each other completely. The minimum upside objective, by the way, is 371.40 something for the head and shoulder bottom. That still is working great. The only exception here is we've now come back to test the neckline. If you like that blue dashed line, the neckline, and you still think the pattern's legit and it's supposed to go straight up again, I don't like that. I'm looking at the possibility of the head and shoulder top producing a breakdown into October and then up. Some conflicting situations. Cues. And sure enough, head and shoulder top, very, very plainly and clear cut. Sharp rally high, breakdown. That took about a week or so. That low was June 26th again for all of them, I'm pretty sure. Top of the market. Oh my God, we got another bearish engulfing. Oh, I'm sorry. No, we didn't. Unfortunately, we never got a bearish engulfing at the top for the QQQ. Overbought in a resistance area, I'm sure I talked about on that day and the expectations, but I had no idea that we were going to have a head and shoulder top, and it looks like it. The minimum downside objective here is 322, again, at a support area. And guess what? Fibonacci percentage retracement from the October lows last year. So that makes all the sense in the world as far as the way it's acting so far. Today could be an up day, 2 or 3, 4 points, as long as it doesn't get and stay above yesterday's high. That's going to be an important benchmark for a while. And I'm just going to comment about the Russell 2000. We have a new low completely. At the moment, it's a little higher on the day. Its rally high was approximately the middle of yesterday's range already. I can't help it. I think this thing could fall apart by the end of the day, maybe. If it doesn't, that's not bad. The key, period, is staying below yesterday's high. All right, let's go to futures. And we've got something to talk about as far as the cycle and the way that the bond market is behaving. And you can correlate this with the stock market indexes. I've been talking about a major long-term bottom in bonds for months. We had a bullish engulfing at support on August 4th. It worked for a few days and made some money, but it did not end up holding. A week later, we started to make new lows again, got a little oversold, and now we saw 2 days of rally. Yesterday started to slip a little, and today is kind of nondescript. We're around unchanged, only down 3 ticks. Yesterday and the day before were about the same rally highs, and at a point in time when we might have had already yesterday the cycle high. I've got the timing point because of the red vertical bars coming down from the highs. This one was a little early, but it was in the, market went down afterwards. That one was pretty good timing wise. That one was excellent timing wise because I had a bearish engulfing sell signal at both. That is more or less what's happening right now. A minor rally and a down move. And here's a minor rally and a down move. And will it do exactly the last time it did the similar situation and drop like a rock? I'm afraid that's a possibility, in which case it implies that interest rates are going to go up more and longer than anticipated in the last few months. The market doesn't like that usually. That kind of helps it work lower. Therefore, the head and shoulder tops are going to get, I think, a little bit of help. Okay. Now, a bunch of other stuff. We got some brand new signals today, too. Let's see here. The E-mini is what we start out with in this group. And it's a little higher in the day, but doesn't mean too much at the moment to me. So let's go to the next chart, and that's the NASDAQ futures, NQ. Same kind of situation. You would expect they're very, very, very similar. Now, with the E-mini, we did get 2 sell signals on the 2 high days before it started to work its way lower, and then a third sell signal. We are ending up with the second one, the one in the middle, at the highest high for the whole damn move up. Great. Head and shoulder top, I have not outlined on the E-mini, but there's the shoulder right there, and there's your inside. The top, this could be, I don't know yet, an inside, and you're going to go sideways for a week and a half. I don't know yet. Or it's finished, and the bearish engulfing yesterday is going to shove it right down into new low ground real soon. Next chart, NASDAQ futures, same story. No sell signals on the highest high, unfortunately, involved in the topping out process, which is not what I built this trading technique for. I built it for that kind of signal at the bottom of a break, that kind of signal at the bottom of a break. Next chart. Got oversold, bounced, slipping a little. Long-term trend is down in the bonds here. I can't help it. I'm thinking there's going to be one more break now, which I was not looking for a little while back. Hey, support didn't hold, and it's not acting good. Next, 10 years, same thing. Crude. No particular important commentary change. Still looking for lower levels. I think it may come down to 73 or maybe even lower. We did sell the high day. Next. Here we go, right through the highs. Heating oil, new high, overbought again, and now there's no way in hell this could be a head and shoulder top, so I have to erase the downside objective and erase the neckline, and that idea did not work out because I thought there was a chance. It was a little too high to begin with, but whatever. Now I'm looking for another downside correction, but I think the trend is still going to be up because you're in new high ground for quite a while now, for the whole year, plus another month or so. Next stopping point, approximately 3.45. Next, natural gas. Nothing super important about today as far as I can tell, but support is holding. We got below 1.565 and it popped back up again. So a little bit of a rally here wouldn't be a real surprise, but I'm not sure about the next big move. Next, gold. Pretty good break today. Now, we did buy the bottom of the market. I would have liked to have seen more upside follow through before a day like today. The only saving factor might be if it closes much stronger, hopefully above that little blue zone, because that was support. Now it's going to be a little bit of resistance, and we'll have to see here. But we did have a buy signal at the bottom of all 3 precious metals and copper. Let's see it. Silver. Look at that. Bottom of the market, August 17th. Bullish engulfing. By the way, I've got ER3 strategy running on this particular chart. So you can see we got short around the top. We got out just a couple of weeks ago at the bottom and went long the next day. And up we go. We sold the top back in here, got out down there. There was a couple of losing trades, not too bad for that one, pretty small, a little bit larger for that one on this particular chart. So, and ER3 is available. Try to reach me. Next, we bought the bottom in the platinum market, and this is a new high and probably a new high close since that low day. In fact, the bullish engulfing, okay, August 17th, one up day, pretty darn good one, profitable as heck. Slight down day, slight, that's day number 2. Then 3, 4, 5, and today's 6. 5 out of the last 6 days, is that what I got? I think I did, have been up. At the moment, it's up, and probably will stay that way. So that was a great signal. We bought it almost at the low the next day after the signal for ER3. Remember, ER1 is long the day of the green or short the day of the red. So it doesn't wait till after like ER3 does to try to get a better entry. ER3 misses sometimes. Next chart. High grade. Sold the high, and then we bought the low day of those particular swings. Now we've got a day and a half or maybe 2 days. It's slightly lower, not much. This is a normal correction and a move up. I don't see any particular reason why it would have stopped at 381. Minor resistance. So I'm looking for a move back up to test the resistance area above the market. And I'll just slide that to the right a little bit more. And probably a week or two. Next, soybeans. New high since major, huge support was tested. So is this trying to make a new high for the whole trend? That would be extremely bearish. Well, I don't know if it's going to be climate change or what, but that's what the implication is. You have a new high for a history. And then you have a retracement back into a big, big trading range that held. And now you're heading right for new highs, maybe. That is not bearish at this particular point. Yes, it's getting close to overbought. Yes, you've got to watch for downside moves after you get into overbought territory. And yes, if they're at a critically important spot, double top, last shoulder high, things like that, closing a gap, then you should give them a lot more credence, but we haven't got that yet. Next chart. Bean oil coming up a lot. Now we sold the second high of what so far is a possible double top. But I'm not liking this amount of strength. I was totally expecting it to be completely opposite and start to make a lower low. So although we had a great sell signal and a great break for a day and a half after that sell signal, plenty of elbow room to lock in a profit, by the way. And that's exactly what our ER1 and ER3 strategies automatically do for you. We track them in 1-minute charts, and the stop moves sometimes minute by minute if there's a big move involved. The strength here is a little bit more than I wanted. We have to watch this very closely, and I'm just going to not take sides momentarily. Next chart. Back up to resistance and overbought. Now that's the combination I like. Excuse me. This is a history of topping out whenever it pokes into the red zone, which it did slightly this morning. It might poke in a little bit more in a day or so, but we should definitely be looking for excuses to go short. And I've got 2 of them, resistance area and overbought, but no reversal yet. Next chart, corn. We're looking at support being broken, but not by much or for very long, and we're testing a little resistance. Pardon me. So, looking for new lows. And if that happens, you've got new lows for a major amount of time frame, and we could drop like a rock if we start closing below 454. 453. Next chart. We're starting to do that again and again now in wheat. We're almost in new low ground. We're not that close to oversold. Wheat definitely looks like it's going to make another set of new lows, and we are very, very low from a historical standpoint. So I'm not sure about the downside potential, but what's happening right now does not look bullish unless it turns around immediately. then this historical support level is going to mean a lot more for a long time. Okay, that's sweet. Next, we've got live cattle. This is a sloppy, but the body parts are there, head and shoulder top. We did get a bearish engulfing bearish signal in the first shoulder high and the top of the market to the exact day. So that's 2 out of 3 parts. But there was no bearish engulfing. Well, there was a bearish engulfing, but it wasn't overbought, so I did not have the price action turn red. It's not an official sell signal, but awful close. Break the line, neckline, drop off a little bit, perfect. It's coming back twice now, but still underneath the neckline, so it really should not go up much more at all. Definitely stay below the line, and definitely start to come down very soon. Very soon, today, early next week. Next chart. And the downside objective you saw, there it is right there, 171 for live cattle. Hogs, well, that's interesting. I had put a little circle there earlier this morning. I'm erasing it now because there was a gap there early this morning. Now it's completely flip-flopped and made a chunk of new lows and may even have a bearish engulfing, but it's not going to be red because we're not overbought. Interesting. The fact that it gave away all that gain and a new high for a couple of weeks to damn near making new lows for obviously a week or more, much more, is very interesting and not particularly bullish. So watch out. This is going to hit some sell stops real quickly. We had a bearish engulfing sell signal in orange juice yesterday. This market came up extremely close to our protective buy stop at 317.85. The high of the day so far has been 317.55, missing by a very small amount our protective stop. I'm hoping, of course, that that's the top and it's going to go down from here. If you were to sell short now, your risk if you use the same stop would be very small, and you'd have a bigger profit if you got out when the system got out. So this is not looking good, but looking is objective, or subjective, I should say. No, objective. Whatever, I've forgotten. Next chart. We are at cocoa, trying to make some new strength, still hovering around this previous bull trend line. We sold the top of the market. It had a huge break immediately after our sell signals and then sloughed off a little bit more. I got the rally I expected. I got the break I was looking for. I don't really want another rally. It could start to do some damage to my bearish story. So I'm looking for sideways to lower real quickly. Next, coffee in a major support area with a bullish engulfing at the bottom of the support area and starting to work its way up, except we've had one down day now. So we bought, the trigger line was at originally 149.52. The low the next day was 150.10, so we missed on that day. The next day, the low was 149.55. Oh, we missed by just a couple of ticks. But ER1 is long and the green, so ER3 missed by just a hair. It's working so far. Today's just a minor down day. I'm looking for a test of the top of the trading range, 167, next chart. Sugar to sweet. Well, a little more strength than I had hankered for. I'm going to start not talking so much about an objective now at 20. It's got to start to break down real soon. That's what I expected, especially from a couple of days ago when we started making new lows for about a month. But this is a complete flip-flop. This is almost a new high and a new high close as well for at least a longer period of time. We'll have to see if this rally holds. We do have a little bit more room on RSI, so at 70.38 right now, it's not quite overbought. So We'll see what happens here. Next, cotton, the rag. We caught the high of the first high of a double top, but support did hold. It did not break out of the double top. Now we're coming up a third time the charm, question mark. If we start closing above 89, this is going to be a significant bullish breakout. I have to say the lows ever since October of last year have been higher, then higher, then higher, and now recently a sharply amount higher, but forcing it into a flat top right triangle breakout, so to speak. Next chart. E-mini, we've done it. Great. You have a great weekend. Talk to you next week. Thank you.